Yo guys, what is good? I hope you're all doing absolutely amazing and are trading safely in the markets. And I'm back, it's your boy VGOK, and I'm back with another video for you guys today. Now this video is going to be a full trade breakdown of a GBP USD buy scenario which I took. It was based on the NFP sort of news release that happened last Friday. And in the end we ended up achieving a maximum risk to reward of a 1 to 40. This trade was an example of a counter trend accumulation schematic style of trade executed within New York session. So as usual, just going to be jumping into the before and after screenshots of the actual trade. So here we can see the bullish break of structure right in here, giving us this bullish point of interest right in here. Price does come into it quite nicely and gives us a good reaction away, giving us reason to go for the entry. Now usually in times like this I would be going for the stop loss around in here, but knowing that the news was coming at 1:30 PM, the NFP news release, I thought I'd give it that little bit extra room to breathe by having the stop loss down in here just below this base. So there we can see the before screenshot, and as we can see that first reaction was really nice. Moving on to the after screenshots, as we can see, so zooming in, we can see that a price does originally come into that original base. Entry was based upon the open of that last candle right in there. So price did dip down a fair bit into the stop loss before then giving a good reaction away. And then at time of the news release, you can see exactly what happened with that sort of big whipsawing effect on price action right in there. So you saw price dropping back down into this region. Challenging this low, but again not really going below it and disproving it. Our stops were in a safe place over here. We didn't move them until price had fully broken away after the news up here, so we were safe from being stopped out. And then obviously there you can see how price has developed on and on. And here, this was a screenshot at I think the second or third TP which I took was about 1 to 29. And right here we can see the actual MT5 screenshot of the entry as well, right in here. Now as I go into the next part of the video, it's going to be going into more of the trading view breakdown of the actual analysis of the trade breakdown. So as we go into it right here, I'll show you exactly where I look to sort of close off the last of the position. Now it has gone slightly higher than I anticipated. I did close the majority, pretty much all of the volume off at 1 to 40. Obviously didn't hold the full volume up to 1 to 40. I was taking partials along the way, which I'll be going into. But no more volume is left running for me on this sort of buy. Look to sort of get a maximum risk reward about 1 to 40 risk reward on that, which is quite nice to see. As you can see, it has continued going higher at the time of this recording, earlier on in today's session I look to take profit on that. So first of all, one thing I want to just touch on is sort of what gave me reason to go for the buys down in here last Friday for the NFP news release. Like, what is this? Basically what I'm trying to say is, what is this demand zone based upon? Now essentially when we look at the daily time frame, and I've had this marked up for quite a while now, it's this sell to buy candle within here acting as the daily demand zone, and we did have a build up of liquidity just above that zone over here at this line. So we can see there's equal low liquidity sitting at this line over here. Price dips back into it early over here within this daily candle, and as we go into the hourly and below, we can see that first dip down below the liquidity was this movement here. We then see a good rejection away, but not quite breaking away with any significance, and then price decides to drop down further again, deeper into the zone. Now if we go back to the daily and even the weekly time frame as well, we can start to see exactly what these sort of areas are made up of. The weekly, we can see it's that wick sell to buy movement in there, and the daily we can start to see, and there's definitely some sort of mitigation point at this blue line down in here as well. We can start to see even on the 8-hour time frame right in here the sell to buy movement within this little wick, which then led on to creating that base rally, which takes out that previous supply level at this point here, is the final point at what it really reached into. So we knew that any sort of bullish order flow that was created, bullish sort of schematics that started to form in this region, you know, it would be worth going for some sort of buys because it was a daily demand zone, which looked pretty nice. Now, as we scale down into the lower time frames, we can start to see, you know, how this drop was made up of in terms of the price action. And I think to really get a good gist of it, we have to go down into the 5 minute and below just to sort of really see what was happening in this region. So as we scroll back into it over here, we can start to see as soon as it taps this area, we can see a bullish break of structure is sort of seen. And the main thing to see is that from this movement to this movement up here, we do successfully break above not just this piece of structure in here, but also this piece of structure right here. So two significant pieces of structure were broken in this one move above. Now, depending on whether it wanted to come and react down into this area where this wick is, or come and react into this base where this quite a nice imbalance is seen, that's why I sort of monitored once more in this region. So we saw price drop down quite nicely into this region, give a good movement away, and then that gave me enough confidence to enter the trade at this region right here. But having the stops below here just in case they wanted us a lower mitigation. Now, looking again in the 1 minute time frame, we can see, you know, definitely how this is all made up. There's a really nice rally, base rally formation in here, which then obviously took out this previous supply zone and what price sort of first started to give that bullish reaction to in here. And of course giving me my entry criteria for the buys. Now, depending on what data feed you are working with, and obviously depending on what broker you guys are with, on FXCM data feed right here, we can see that this wick with that news release at 1:30 p.m. actually drops down all the way to this low again. So obviously thinking if you had moved your stop loss up to here, you know, just before the news, then, you know, by the looks of this, it looks like you would have probably got stopped out. But on a lot of data feeds that I've checked on now, especially on the brokers themselves, this wick only extends its way down to here, which is quite a key factor. So obviously in our situation it didn't really matter too much because I didn't really move the stop until after the news, just to give it that extra bit of room to breathe. But when I did check it on my MetaTrader, the wick only went down to here to basically fill in this imbalance, and then we saw the sharp movement upwards. So there was nothing to really worry about on that front there. So that was pretty much everything in terms of my entry criteria. And as we look further into this sort of price action, there was multiple areas for re-entry as well. So we can see that in this movement up after the news, there was a really nice push up, breaking structure above this structural point in here. And as we zoom in and see on the 1 minute time frame, we can see that this is that last sell to buy region where price nicely gets into this area. And as price does get into there quite nicely, we see a bullish break of structure from there, so potentially giving you an opportunity to re-enter in this little order block looking institutional candle right in there. So having an entry there, stop loss at the low over here to then further capitalize. And it was nice how that nicely lined up with the news release at 3 o'clock as well. So there was another news release on that Friday at 3 p.m. After the NFP news release, and that's what's continued that move into, you know, that crazy profiting sort of areas at the top there. Now, in terms of the partial TPs which I took, the main first TP for me was definitely these equal highs. Once these equal highs here were crossed, so pretty much after that 3 p.m. news, that was the main stage where I took, you know, a big chunk of sort of my partials at that stage, and then obviously move the stop loss into profit as well to keep the trade risk free. Then further than that, the next TP point that I had was in this imbalance fill, just in case that this downtrend was still you know, still valid, still creating lower highs and lower lows. Obviously if it was still valid and creating lower highs and lower lows, this would be a very logical area to see that next lower high to go on and continue that downtrend. We did get a slight reaction, as you can see in that wick right in there, but nothing enough to sort of, you know, confirm that bearishness and to continue back down. So yeah, after this sort of area was exceeded in this candle right here, I knew I was good to hold over the weekend as well, which is what I did. And earlier today, obviously today being Monday, this is where I've looked to basically close out the max of the risk to reward at that 1 to 40 right in there. And it was based upon this 30-minute time frame. As we can see, there's a nice buy to sell candle right in there. If I zoom in, be able to see it a lot clearer. We can see there was a nice buy to sell candle in there, also that joined with this drop, base drop supply zone that's created. So potentially looking for some sort of mitigation in there for it then to start reversing. Mainly because that was where we saw the creation of that more obvious lower low in here. So I was hoping for maybe it wants to come back for a second mitigation in there, and then sort of start to see some bearishness. So that was going to be my max TP, which is where I took the remainder of my position off for the buys at 1 to 40. And obviously, as we can see, it did get into there. It did experience a slight drop down today in New York session, but on the whole, it did end up going even higher, and then trading even higher up into there. Now there is this supply zone up at the top here, so it could have potentially have held for even further profit up into this region. Having done so, that would have made me given me a 1 to 52, provided that the trade does actually get up there. But to be honest, that 1 to 40 risk to reward, I was pretty much happy with what I was achieving, and safe to say we banked a decent amount of profit based on that trade. So there we have that full breakdown of that 1 to 40 risk to reward accumulation style of trade on GBP/USD. Now I hope you guys will take value and learn from this video, and if you did, please do hit that like button, share and subscribe. Thank you all for watching, and I'll see you guys in the next video for more of that trading source.